Net worth is an important way to look at your financial health. It simply means the difference between what you own and what you owe. Think of it as a snapshot of your financial situation at any given time. Building any amount of net worth is an accomplishment, but reaching $100,000 is often seen as a major milestone for people for a number of reasons. $100,000 isn't just a random number. It marks a point where noticeable differences in the speed of financial growth start to happen, making your account balance soar in ways that may have felt impossible before. The psychological shift at $100,000. When you hit that $100,000 mark, it often triggers big changes in how you think about money. For many people, reaching this goal boosts their confidence and opens new investment options. Before you reach this milestone, you're usually focused on saving money, building an emergency fund, paying off debts, and creating a financial safety net. Before you hit $100,000, saving feels necessary for financial security, especially if you're starting with a lower net worth. You're likely more concerned about protecting your money than growing it. But once you cross the $100,000 line, your mindset begins to shift. Your focus moves from saving to investing, which is where real wealth building starts. This change occurs because you realize that just saving, especially in accounts with low interest, isn't enough for long-term growth. With $100,000 saved up, you might feel more at ease taking smart, calculated risks that have massive potential for bigger returns. This is a key moment when the goal of growing your wealth becomes more important than the fear of losing money. Increased financial confidence. One major change after reaching $100,000 is an increase in financial confidence. You'll feel more secure knowing you have a cushion that can handle losses. With a six-figure net worth, you're more likely to explore investment options that have a much higher risk versus reward, such as stocks or real estate. This willingness to take smart and calculated risks is vital for building wealth. Higher risk investments can be dangerous if you do not have the financial literacy to understand the risks, but they often offer bigger returns compared to keeping your money in low-risk accounts or bonds. Learning about the products you want to invest in at this stage is a necessity, or you can engage with a qualified investment professional or financial planner who can help develop a portfolio of products for you. This ability to take on some risks can lead to gains that boost your net worth even further. Crossing the $100,000 threshold opens doors to new investment options that were previously out of reach. Many financial institutions and investment firms set minimum investment amounts that only those with a solid net worth can meet. For instance, some mutual funds and real estate partnerships require minimum investments, limiting access for those who only have small sums of money to invest. Access to investment opportunities. These investment options often come with the potential for high returns compared to what lower net worth individuals can access. Hedge funds, for example, are known for aggressive strategies that can make a lot of money, although they come with higher risks because of their market exposure. Private equity and venture capital investments allow you to invest in new companies that could grow quickly. By reaching that $100,000 net worth, you can start to gain access to these profitable options that can help your wealth grow faster. Another major benefit of hitting the $100,000 mark is using financial products and services that come with lower fees and better terms. Many banks have pricing structures where fees drop as your assets grow. For example, wealth management firms usually charge lower fees for managing larger amounts of money. This means that as your net worth increases, the cost of managing your investments goes down, letting you keep more money invested for growth. The power of compound growth. One of the most powerful concepts in building wealth is compound growth. This is the idea that the money you earn can generate more money over time. For example, if you have $1,000 earning a 10% return, you would earn $100 in the first year, bringing your total to $1,100. In the second year, you earn another 10%, which is now $110, giving you a total of $1,210. This process continues, and over time, the amount you earn grows significantly because you're earning returns not just on your initial investment, but also on the interest that has been added. Now, compare that to having $100,000 at the same 10% return. In the first year, you would earn $10,000, bringing your total to $110,000. In the second year, you'd earn $11,000, resulting in a total of $121,000. The The larger your initial investment, the faster your wealth can grow through compound interest. This principle is why reaching that $100,000 threshold is so important. It sets the stage for your money to work for you more effectively. Networking and knowledge sharing. As your net worth grows, you also gain access to networks of high net worth individuals. These connections can be useful for building wealth, offering access to exclusive investment opportunities and business deals. Being part of a wealthy network can help you find investments not available to most people, like private equity deals or off-market real estate investments. High net worth networks often provide valuable knowledge and advice. Networking with successful individuals can lead to sharing tips and strategies that help you grow your wealth even more. This collective knowledge can help you make better investment decisions and increase your chances of success. Generating passive income. One of the biggest perks of reaching $100,000 in net worth is the ability to generate significant passive income. Passive income is money that comes in with little effort, typically from investments in things like stocks, bonds, real estate, or businesses. The key to making good passive income is having enough capital to invest in income-generating assets. With $100,000 or more, you can put part of your net worth into investments that pay off over time. For instance, dividend-paying stocks give you regular income in the form of dividends. The more shares you own, the higher your income. Similarly, bonds provide interest payments that can be reinvested or used for everyday expenses. Once your passive income starts coming in, one of the best ways to build wealth is to reinvest that money. Putting your dividends, interest, or rental income back into your investments creates a compounding effect that can speed up the growth of your net worth. For example, if you earn $5,000 in dividends from your stocks and reinvest that money into more shares, you can increase your future dividend income. This creates a snowball effect, making your passive income larger with each reinvestment, which boosts your overall net worth. Protecting against inflation. As your net worth increases, it becomes important to protect your wealth from inflation. Inflation is the slow increase in prices over time, which can reduce how much your money can buy. For those with higher net worth, protecting against inflation is crucial, since even small increases in inflation can have a big impact on large amounts of money. One of the best ways to guard against inflation is by investing in real assets. Real assets, like real estate, commodities, and infrastructure, have real value and tend to grow over time, often outpacing inflation. By investing in these assets, you not only protect your wealth, but can also increase your net worth as they appreciate. Reaching the $100,000 milestone in net worth marks a pivotal turning point on the path to financial success. Surpassing this threshold brings about significant advantages that can accelerate wealth accumulation. By understanding and leveraging these dynamics, you can move from merely saving money to truly building lasting wealth. If you found this video helpful, don't forget to like, comment, and subscribe. Let us know your thoughts on reaching financial milestones in the comments below.